Thank you for joining me this Friday, the 23rd of February. I'm Grady Wolf, market analyst with Pilbara. As we end week 3 of the local reporting season calendar, 165 companies have reported, with 59 beating expectations, 62 meeting expectations, and 44 missing expectations. 22 companies have been upgraded by brokers, while 28 have been downgraded, mostly due to slowing earnings growth and cost management inefficiencies across the first half. Charter Hall and Beach Energy are two names that missed expectations, while Alliance Aviation Services posted a beat. 2021 market darling Pilbara Minerals reported first half results that largely reflected the turbulent market conditions for all lithium miners and producers currently, as the price of the commodity continues to decline, with lithium now down 76% over the last year. For the first half of FY24, Pilbara Minerals reported production rose 4% on the PCP and sales rose 7%. However, the realised price in US dollars per tonne fell 67%, which impacted the bottom line financial performance, as PLS also reported revenue fell 65%, EBITDA fell 77%, statutory profit after tax fell 82%, and the cash margin from operations fell 71%. To the lithium giant's credit though, it has a very strong cash balance of $2.144 billion and strategies in place to greatly reduce cost of operations moving forward, including the Pilgangora Operation Power strategy. Shares in PLS fell 1% following the release of the results. Shares in Australia's leading supermarket giant Woolworths also had a turbulent week this week after the company's chief executive and managing director Brad Banducci is standing down on September 1 after 8.5 years in the role, and the release of the company's first half results also spooked investors. The supermarket giant reported revenue rose 4.4% to $34.64 billion and declared an interim dividend of 47 cents per share. However, investors were more focused on the loss of after significant items, which soared 192.4% to $781 million for the half. Poor performances from the company's New Zealand businesses and Big W businesses weighed on the company's first half performance. Following the release of the results, shares fell and brokers had mixed reactions, with Macquarie retaining a hold rating amid Woolworths' market power, while Citi has a buy rating on Woolworths. NAB was the next big bank off the rank to report December quarter earnings, which saw the price of the shares in NAB rally 0.4% despite a lacklustre result, with some key warnings of headwinds to come. NAB reported cash earnings fell 16.9% in the December quarter to $1.8 billion, which, as the theme goes with the big banks this reporting season, was not surprising, as the Big Four increased provisions on rising defaults and a high level of home loan switching by customers seeking to find the most affordable interest rates. Higher expenses than forecast and the outlook for rate cuts in Australia has 3 brokers maintaining a hold rating on the leading business bank of Australia. The Flying Kangaroo released first half results at the latter end of this week, and investors disembarked their investment in the airline, with shares plunging over 6% on Thursday for Qantas. For the half, Qantas reported a 13% drop in underlying profits as the airline unveiled a new Qantas-linked fleet and plans to offer free Wi-Fi on long-haul flights. Despite this, Qantas still reported a $1.25 billion underlying profit before tax, which was down 12.8% on the prior corresponding period, which the airline attributed to $600 million in lower fares, cutting into profit margins. But this was mostly offset by increased demand for travel. No interim dividend was announced, but a $400 million on-market share buyback was declared, and the airline finished the half with net debt of $4 billion. Over on Wall Street, there was much to love about Nvidia's earnings results, which not only shot the lights out in terms of exceeding all expectations, but also eased investor concerns of overvaluation fears of the world's largest semiconductor producer. While many in the market question just how far Nvidia can grow, their results speak for themselves, in showing $22 billion in revenue for Q4, which beat expectations, and the company also outlined the expectation of $24 billion in revenue for Q1, indicating the growth runway is yet to slow down. So what have we learned so far this reporting season? China is hurting some results while surprising others with resilience. Take BHP as the former and A2 Milk as the latter. The big banks may be boring and past their peak, but investors and some brokers see opportunity in the stability they offer. Cost management is the key to weathering the current high interest rate, slowing economic growth environment across every sector, as margin pressure and even contraction is a noticeable trend this reporting season so far. And dividends are the key to winning over investors or prompting a mass exodus of shareholders. Locally, from Monday to Thursday, the ASX 200 fell 0.62%, as investors sold out of consumer staples and real estate stocks, both on corporate earnings results and wavering economic uncertainty. The utilities and information tech sectors offset some heavy losses, though, over the 4 trading days, with gains of 2.51% and 1.75% respectively. The winning stocks on the ASX 200 this week were led by CSR, jumping 23%, Reliance Worldwide Corp rallying 21.54%, and A2 Milk Co rising 16.83% on its strength in the Chinese market at the moment. On the losing end, Strike Energy tanked a further 22% on its latest trading update, while Star Entertainment Group lost 20% on a second legal inquiry update. The All Ords fell 0.51% over the trading week this week, as Humm Group and MA Financial Group fell 24% and 23% respectively, while APM Human Services International soared over 60% on receipt and rejection of a takeover offer. The most traded stocks by Pilbara clients from Monday to Thursday this week were Ampol and BHP. Clients also bought into Neuren, Woolworths and Woodside, and while taking profits from Westpac, NAB, ASX, Pilbara Minerals and Macquarie Group. The most traded ETFs this week were led by BetaShares geared Australian equity hedge fund, Global X FANG Plus ETF, and BetaShares S&P ASX Australian Technology ETF. And for the week ahead, we will see some key names including Endeavour Group, Nanosonics, Suncorp Group, CityChick, Coles, Karoon Energy, Zipco and more releasing results. Overseas, estimated US GDP growth rate data for Q2 is out on Wednesday. Personal spending data for the US month-on-month for January is out on Thursday, and US ISM manufacturing PMI is out on Saturday, Australian time, with the expectation of a decline in GDP and personal spending, but an increase in manufacturing PMI. And that's all we have time for this Friday and week, and we hope you have a wonderful weekend, and as always, happy investing.